Central banks are buying gold to protect themselves. Happy Wednesday, everyone, and welcome back to Insights, brought to you by Ainslie Bullion and the Gold and Silver Standard. Today, Branko is joining me to dig a little bit deeper into central bank gold buying and to answer a few viewer questions that we've received. So how are you going today, Branko?
Good, Tipper. Thanks for having me back.
So you were behind the news article today, and it was an interesting piece talking about central banks and what they've been doing generally with buying gold. And it's quite an interesting story we've been talking about quite a bit on Insights. But can you just give us a bit of a background into what you're talking about in the news today?
So effectively, the World Gold Council came out with the report, and in 2022 was the biggest year for central banks buying gold, since 1967, so over 50 years. And the news article looked at the relationship between the balance sheet of these central banks and how a lot of them are really struggling. For example, in the US Federal Reserve lost 720 billion last financial year. Bank of England lost 200 billion. Sorry, 720 billion for the Federal Reserve and 200 billion for Bank of England. And those central banks are buying gold at crazy rates. You know, globally around the world, we're seeing central banks that suffered a lot from their kind of pandemic response, where what effectively happened was to stimulate the economy, they would buy these bonds, right? Putting kind of increasing the money supply. Yep. And there's a consequence of that. Obviously, we saw inflation, and there's a consequence of that. We've seen these interest rates. Now, when these interest rates go up, these bonds get devalued. So that is what has caused these mass kind of collapses in these central bank balance sheets. And ironically, it's their own doing. So it's just the relationship between these banks protecting themselves against inflation by buying gold as their balance sheets decrease.
So that's interesting, and that's useful sort of as an overview, because when you think about it a little bit deeper, the central banks can't actually default, can they? They can't really run out of money, at least Western ones, because they created that money out of nowhere. So when you're saying that they have a hole in their balance sheet, or that they're sort of losing money, it's not actually a problem. Like, they can just print more and fill that hole in. But it does become a problem at some point if that just keeps spiraling out of control and people lose confidence, doesn't it?
Yeah, so good point that, in first world nations, central banks don't go bankrupt. But for example, which I think we'll get to a bit later, Australia, we lost over $36 billion last financial year as a consequence of kind of the stimulus package and this kind of quantitative easing. And even if you look at our history of savings over 20, 30 years, we would still be, the RBA would still be net about $12.5 billion from overall. So if they were a private company, they'd be bankrupt, but because they're an arm of the government, effectively, they can be solvent.
Yeah, they can rig the game. They can play it that way. Yeah, so it's an interesting point, because ultimately it doesn't matter, in quotes, but it really does matter, because if you continue doing that, you lose confidence in your underlying currency. There's all those other consequences that you were talking about, with bonds being less valuable and interest rate rise and all of those things that tie in together. So that's really interesting. I really want to today take the opportunity to talk about a few questions that we had come in, because there were some excellent questions, and thank you for people who did that, because it really got us thinking and discussing before we came on here. So the first question from Alan was about the RBA specifically and what you've been talking about there. So how's the RBA been playing at this? Have they been buying gold? Are they really part of this trend as well?
Yeah, they absolutely are part of this trend. Like, we're seeing all these central banks that have these massive holes in their balance sheet, they're all buying gold. And the RBA, they're up to about 80 metric tons of gold now. And in 2019, they were at 50. So what's that, about a 60% increase in 3 years? So that's quite significant. And again, that is a consistent trend that we are seeing. So there is a relationship there that is important to note.
Right. So Australia, tick. We're definitely part of that global trend of central banks. There was another question there that I was wondering, which was quite specific and I found interesting, which was, why is Australian gold in the Bank of England vaulted there effectively? And if you could talk a little bit about that last audit, because this was something I didn't really know much about.
Yeah, I did some looking into this as well as a consequence of getting the question. I was quite fascinated to find out that, firstly, all our gold, all 80 metric tons, is in the Bank of England. The reason that they provide is for liquidity purposes, because a lot of other countries have it there as well.
Mm-hmm.
However, a lot of politicians are kind of pushing back against that, which in my mind makes sense. As kind of in crypto as well, we want sole custody over our assets. So I think it would make sense for Australia to hold their own gold, but that isn't quite the case. But to answer the question, apparently it is for liquidity. And the last interesting part of that is the recent audit. And what I found most interesting about this is that these audits, you only have to audit about 10% of the actual gold available. So I thought an audit, you have to do the whole thing, but apparently it's okay to only look at, 10%, which, at Ainslie here, we do it all, just, put our hand up. But yeah, so.
Yeah, that's fascinating. And I know, I don't know a lot of detail about it, but a lot of the controversy around the Fort Knox gold in the US, and where if the gold was there, had a lot to do with audits or lack thereof as well, didn't it?
Yeah, absolutely. Apparently it is industry standard to do 10%, but I mean, I think surely people would want a full audit, I imagine. I mean,
well, it doesn't seem like something that's impossible to do, does it? I mean,
yeah,
at the end of the day, it's counting.
If you think about the taxpayer money that goes towards just sending them to England on private jets and back, you know what I mean? Surely we could, if we had it here, use some of that taxpayer money to just do the other 90% of the audit.
It probably is more complicated than that, and we're probably simplifying something that's quite difficult. But it's certainly an interesting question when we're talking about Australia as a massive gold producer, sending our gold off to Bank of England, and liquidity. I mean, liquidity is a real issue, something that would need to be considered. But you were saying all of our stock was there, weren't you?
Yeah, 80 metric tons, all 80.
So it seems like something that possibly doesn't need to all be there, at least.
Yeah. Well, there are mixed reports. So I read 80 in one article, and then another it was like 67, 68, and then the rest somewhere else that we don't know about.
But it's certainly a sizable chunk is there.
Yeah, for sure.
Yeah, fascinating. So we'll have to keep paying attention to that. A really good question. Another question we got was about who are Australia's gold export partners, because that is kind of relevant and almost ties into the previous question when we're thinking about Australia as a major gold producer. So what did you find there?
Yeah, so it was UK was number one by quite a substantial margin. We export.
And just to interrupt there, you're not talking here about the central bank exporting. You're talking about actual exporting as a commodity.
Yeah. As a commodity. So as a commodity, it was UK, and then US was second. And then I think it was China fourth and India third. So we have a wide variety of partners, and we are quite a large producer of gold. So it's important for our economy. But I did find it interesting that the UK was almost double, or basically more than double of the US. So we do rely a lot on the UK in both storing it and exporting it to them.
No, and this is why these questions are so good, because we find out new pieces of information that we wouldn't have necessarily been thinking about before. And one final question I'd just like to end on that came in was asking about the relationship between basically was an observation that we have times in the evening, Australian time, where the price of metal really moves around, and wondering if there was some relationship there between the time of overseas opening of markets, for example, and the gold price, because you're really seeing that increase in volatility right on that Australian evening time. What was your sort of answer to that?
Yeah, I think generally in markets, at the open, you will see significant volatility. So that's probably the easiest answer to that question, is that, when everyone's in front of the screens, and the US is obviously the big kind of, market that we all watch. So during those times, you'll see that spike of volatility and those big moves.
Mhm.
Yeah.
And I know there has been a lot of discussion, and I mean even court cases over silver in particular, with manipulation, where you had JP Morgan and other bullion banks effectively playing around with that price at those opens and closes to push it in one direction and profit from the corresponding difference. So that's also an issue, isn't it?
Yeah, and they did get fined for that. So just that isn't really a rumor. That is a confirmed thing that occurred.
That absolutely. So there could be an element of that going on as well. But I suppose from what you're saying before too, we do have to factor in that as markets are opening, that's when people are getting to work. They're starting at their desks. They're moving some of these metals. So you do actually see more volatility generally at the open and close.
Yeah, definitely a combination of potentially both. And you always have those bad actors that do those activities, be a combination of both, I think.
Yeah, and some of it won't even be bad acting. I mean, if you see a pattern repeat day after day,
True,
and you're out there trying to make a profit, you're going to jump on that pattern, I suppose, as well. So a lot of people will just be trading that situation because the volatility's there, the liquidity's there at that time. So yeah, it kind of makes sense, I suppose.
Absolutely.
Well, Branko, thanks for your work on the news today and for answering and looking into those questions. So we look forward to you keeping us up to date on the central bank situation, particularly as it continues to unfold. So thank you for that.
Thanks for having me on. Look forward to next time.
And also thanks to everyone for watching and for those questions. We do appreciate those. So keep them coming in on the social platforms. Gives us some more content to really look into and think about, so we know that we're answering what you want to know. If you aren't happy with those answers today, let us know as well, and we'll continue our exploration and report back. But it really helps to have community involvement in getting the right message out that everyone wants to hear. So thank you for that. That's us for this week, with the Australia Day holiday tomorrow. So we're all looking forward to that. But we'll be back on Monday with Alex to continue the discussion then. So have a great day off and a great weekend, everyone. And we'll see you again next week.
Yeah.